Jamie Dimon once said, "Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas." Well, I found a way to make watching grass grow seriously profitable. It's called SCHD, Schwab US Dividend Equity ETF. This isn't just another investment strategy. It's a long game that could seriously change your financial future. Today, we're diving deep into what SCHD is, why it's a goldmine for smart investors, and how putting $100,000 into SCHD could transform your bank account. But here's the kicker. You don't need 100 grand sitting around to get started. We're not talking about dumping a lump sum into SCHD. I'm going to show you a realistic approach that anyone can start with. I've crunched the numbers, done the research, and I'm laying it all out for you. It's not as thrilling as a night in Vegas, but trust me, it could change your life if you stick with it. So, what exactly is SCHD? Think of SCHD as a treasure chest of top-tier, dividend-paying stocks, all wrapped up in one easy-to-buy package. It's not just any random collection. It's a carefully curated group of companies that have a track record of not just paying dividends, but growing them year after year. Now, why does SCHD stand out in the crowded world of ETFs? Let me break it down for you. First, it's incredibly well-rounded. We're not talking about a one-trick pony that's all in on one or two sectors. SCHD gives you exposure to a wide range of industries. This diversification is your safety net, managing risk while still letting you catch those growth waves. Second, it's a bargain hunter's dream. The expense ratio is a mere 0.06%. In plain English, for every $10,000 you invest, you're only paying $6 in fees per year. Compare that to some actively managed funds that'll take 1% or more, and you'll see why this is a big deal. Lower fees mean more of your hard-earned cash stays invested and working for you. Third, SCHD is a dividend powerhouse. Right now, we're looking at a juicy yield of 3.43%. Let's put that in perspective. If you had $100,000 in SCHD today, you'd be looking at about $3,430 in dividend income in your first year alone. But remember, we're not talking about dumping 100 grand all at once. I'll show you a more profitable approach in a bit. Now, let's peek under the hood and see what's actually in SCHD. This fund is holding 104 different stocks, spread across various sectors. Healthcare leads the pack at 16.27%. Industrial follows closely at 13.34%. Consumer defensive takes 14.26%. Financials claim 18.38%. And energy rounds out the top 5 at 12.46%. These top 5 sectors make up about 74.7% of the fund. It's like a perfectly balanced meal of stable, defensive sectors and growth-hungry industries. But who are the star players in this all-star team? The top 10 holdings read like a who's who of corporate America: PepsiCo, Broadcom, Merck & Company, Coca-Cola, The Home Depot, Cisco Systems, Texas Instruments, Verizon Communications, AbbVie, and Chevron. These heavyweights make up nearly 42% of the fund. We're talking about companies that have been paying and increasing dividends for decades, businesses with rock-solid foundations, and a commitment to sharing the wealth with shareholders. Here's where it gets really exciting. SCHD has been growing its dividend by an average of 15.56% per year over the last 5 years. Think about that for a second. Your dividend income could potentially be growing by over 15% each year. It's like getting a raise without having to kiss up to your boss or work insane hours. But I know what you're thinking. Sounds great, but what about the actual growth of my investment? Well, SCHD has you covered there too. Over the past 5 years, it's gone toe-to-toe with the S&P 500 in terms of performance. You're not sacrificing growth for income here. You're getting the best of both worlds. Speaking of the S&P 500, let's put this in context. The S&P 500 is the gold standard of the stock market, representing 500 of the largest U.S. companies. While SCHD doesn't have 500 positions, it's investing in many of these same blue-chip companies. The fact that SCHD has been able to match the performance of the S&P 500 while also dishing out a higher dividend yield, that's like having your cake and eating it too. Now, let's talk about how these dividend payments actually work in your favor. When SCHD pays you a dividend, you've got two options: pocket the cash or reinvest it to buy more shares. If you reinvest, you're growing your share count without having to dig into your own pocket. Then, when the next dividend payout comes around, you're getting paid on those additional shares too. This is how you start the snowball effect that can lead to serious wealth over time. Let me throw some numbers at you to make this crystal clear. Say you start with $10,000 in SCHD. At the current yield of 3.43%, you'd earn about $343 in dividends in the first year. With SCHD trading at about $81.96 per share, that $343 could buy you an additional 4.1 shares. But remember that 15.56% 5-year dividend growth rate we talked about? If that trend continues, in year 2, you're not just getting paid on your original investment. You're getting a bigger dividend on more shares. We're talking about a potential payout of around $448 in year 2. That's a 20% increase in just 1 year. Now, let's address the million-dollar question. How much can you potentially make by investing $100,000 into SCHD over time? We'll start with a more realistic scenario. A $10,000 initial investment, reinvesting all dividends, and adding $7,500 per year. That's about $625 a month, still less than many car payments. In year 1, you'd have that $374 in dividend income. But by year 2, after reinvesting and adding another $7,500, you'd have about 247 shares, potentially giving you $798 in annual income. By year 3, you'd break the $1,300 mark in annual dividend income. And by year 5, you could be looking at nearly $2,600 a year. Not exactly retirement money, right? But hang on, because this is where it gets interesting. If you keep this up for 13 years, you'd have invested a total of $100,000 of your own money. But here's the kicker. Thanks to the power of dividend reinvestment and growth, you could potentially own nearly 1,500 shares of SCHD. And those shares? They could be cranking out close to $40,000 per year in dividends. That's about the average annual salary for an individual in the US. In about a decade, you could build a dividend stream that rivals a full-time job. But for those of us with bigger dreams, $40,000 in 13 years might not cut it. So let's push it a bit further. What if we kept this strategy going for just 2 more years? By year 15, you'd have invested $115,000 total. But those extra 2 years could make a world of difference. We're now looking at potentially 1,800 shares of SCHD, pumping out an annual dividend income of around $55,000. That's the snowball effect in action. In those extra 2 years, you've not only added $15,000 more in contributions, but you've potentially gained an additional $15,000 in annual dividend income. Your money is making more money, which then makes even more money. Now, I can already hear some of you saying, 15 years? That's forever. And yeah, it's a long time, but that's exactly the point. This isn't about getting rich quick. It's about building a wealth-generating machine that keeps churning out cash, year after year, even while you sleep. And here's the best part. The benefits start rolling in long before that 15-year mark. Every single year, your dividend income grows. Every quarter, you're getting a bigger check. It's like getting a raise 4 times a year, without having to butter up your boss or sacrifice your weekends. This, folks, is the power of patience and consistent investing with SCHD. Now, I want to be crystal clear. These are projections based on historical performance. The market can be as unpredictable as a cat on catnip, and past performance doesn't guarantee future results. But this gives you a solid idea of the potential power of dividend investing with an ETF like SCHD. So, what's my personal game plan? I'm adding to my SCHD position every single month, rain or shine. Even if it means increasing my average cost basis, I'm all in on growing my share count and watching that dividend stream swell. Remember, building wealth is a marathon, not a sprint. It's about consistency, patience, and letting the magic of compounding do its thing. So, there you have it. That's why I believe investing in SCHD can be absolutely life-changing over time. It could set you up for long-term financial success. That said, this video was all about long-term gains. But what if I told you there's a way to potentially cover your rent and gas with monthly dividends? If that sounds interesting, check out my other video titled, 5 Monthly Dividend Stocks for a Safe Financial Future. Trust me, you don't want to miss that one.